Buckle up, everyone. You are strapped in and ready for the Insurance Hour with me, your host, Karl Susman, informing, educating, and entertaining one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. Phone lines are open for your insurance-related questions. Give us a call, 559-656-0317. You can also text that number. You can also send your questions about insurance, anything related to insurance, please, to questions@insurancehour.com. If you'd prefer, you can go ahead and send us a text also to our text group, 567-4-CARL. That's 567-5275. And lastly, if you want to ask your question online, you can go to insurancehour.com/ask, and we will go ahead and get you a private message back regarding the question that you have. With that, we are going to have the phone lines open today, and we're going to continue on with our listener/viewer/you emailed questions. Let me jump right in. First email says, I've been researching earthquake insurance for my home in California. A wise thought. But I'm a bit confused about how the deductible works. Are they calculated based on the total insured value of my home or on some other calculated amount? For example, blah, 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 blah. Okay, let's talk a little bit about earthquake insurance. Earthquake insurance is one of those things that a lot of people either think is already covered on their home insurance and it's not, or they're just, again, as this person said, they're just not 100% sure if it's something, how it works, let's say. Now, deductibles vary on earthquake insurance policies, and they can go as low as 2.5% all the way up to 25% or even higher. And that deductible is a deductible of the amount of coverage that you have, not the amount of damage that you have, not the value of your home, nothing along those lines. We're talking about the insurance amount that you have. Briefly, while we're talking about earthquake insurance, I would be remiss to not mention and thank our sponsor, Giovera Earthquake Insurance Company, for sponsoring today's show. If you do want to get a quote for your earthquake insurance, go ahead and you can check out getquake.com/insurance hour, and that will also help the show out. So earthquake insurance through Giovera, we thank them for their sponsorship. And I wonder if they sent this question in. I'm just kidding. We've got 70 some odd questions that have come in. This one just happened to come up first. The next question saying, I like this, Dear talk show host. Okay. I am currently renting an apartment and have standard renter's insurance that covers my personal belongings. Good. I have been hearing a lot about umbrella insurance policies lately. As someone who doesn't own a home or significant assets, would an umbrella policy offer me any additional protection? What are scenarios where a renter might need this extra liability coverage? It's a great question. And I'm impressed of your knowledge of what an umbrella policy is. Let me just, for everyone that might not be familiar, umbrella policies are going to provide additional liability coverage, as this person suggested, meaning in the event of a lawsuit, in the event of negligence, in the event of something that's going to be happening liability-wise. And a renter's insurance policy typically does come with liability insurance. And again, it could be anywhere from $100,000 up to $1 million that comes on that policy. Now, in the event that you don't have enough coverage, meaning they're also referred to as burning limits, meaning let's say somebody sues you and you have $1 million policy on your renter's insurance, $1 million in liability. Now, burning limits means that all of the litigation costs, the attorneys, the court fees, everything that surrounds that entire process is being taken out of that $1 million limit, meaning that in the event that it goes to trial or there's some type of settlement, you're already lower than that $1 million because all of those costs have been eaten up from all of the process that's actually gone on. That's called burning limits. And most insurance policies will specify whether the liability insurance has what's called defense costs within or defense costs outside of the limit of liability. Huge difference, as you can imagine, right? Because if you have $1 million policy and the defense limits are outside of that limit, that means that in the event that you're found liable or there's some type of a settlement, you're going to have $1 million. Versus if you have $1 million on your policy and the limits are within, by the time you get to that stage, you could have half of that money already spent on legal fees. So effectively having, let's say in this example, half the amount or $500,000 in liability insurance. So to answer your question, under what circumstances would a renter need to have an umbrella policy? I would say that anytime you're looking to have additional protection from litigation, then you would want to look to get a liability insurance policy, namely like an umbrella. Keep in mind also that an umbrella policy is going to provide additional liability typically on top of not just your property and you, but in case there's a large car accident and there's liability exposure that you have there as well. For this reason, you'll also find that in order to qualify to purchase an umbrella policy, the insurance carrier is going to ask, well, how much underlying liability insurance do you have? Meaning, do you have $100,000? Do you have $1 million on your homeowner, your condo, or your renter's policy? And they're going to ask, how much coverage do you have on your auto insurance policy? That's important, again, because they're going to be paying liability on top of what they're paying. I apologize. They're going to be paying their liability on top of a potential loss stemming from property or other, and on top of an auto accident. So keeping that in mind, I would say anyone that's looking to have additional protection would be looking to get an umbrella insurance policy. Keep in mind that we're talking about liability primarily. We're not talking about physical damage to your goods. I know sometimes I've been told, or people have mentioned that, well, I don't need to get more personal property or special coverage for my personal property because I already have an umbrella. And I have to stop them and say, well, wait a minute, you realize that the umbrella policy is not going to do anything for your personal property. Your umbrella is strictly liability insurance. So keep that in mind as well. Umbrella, even though it gives you that impression that it goes on top of everything, and we go along and then we say, well, then it would protect you for everything. No. Umbrella equals liability insurance. Just keep that in mind. It's not going to give you protection for your expensive jewelry. It's not going to give you protection if you don't have enough coverage on your home and there's some type of a physical loss. It's strictly there to provide liability coverage. So remember, umbrella, liability. We're going to get ready for our first break. I want to give you the housekeeping information again because we've made some changes. Remember, any questions, give us a call or text to 559-656-0317. You can also join the text group 567-4Carl. That's 567-367-5275. And brand new, you can jump on our website at insurancehour.com/ask. You'll be prompted to put in a question there, your information. We're going to answer that question the best we can and send it right back to you. It's not at a public forum. It's private. You ask, you get the best answer that we can. Let's take our first quick break, and when we be back, more questions from you. This is Insurance Hour. Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when. They can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There is a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We are talking about all things insurance, your favorite topic and mine. Today, we're also going through your emails and questions that you've submitted. Meanwhile, if you do have a question, you can give us a call or text at 559-656-0317. You can also send your questions in by email to questions@insurancehour.com. Or if you want a private answer, jump on our website, insurancehour.com/ask, and you can post your question there and we will get back to you directly. All right, let us get back to your questions. This one looks like it's about flood insurance. Okay. I live in an area that is not designated as a flood zone, but with the increasing instances of bad weather, I'm concerned about potential flooding. Is it worthwhile to invest in flood insurance, even if my home is in a low-risk area, blah, 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 blah. Okay. Now, this is interesting because I want you to understand that just because you're in a designated flood zone, first of all, who's designating that? It's usually FEMA. A lot of times it could be banks. A lot of times it could be other entities. There is a commonly accepted area for flood zones, but it's not all encompassing, right? It's not the end all be all. So just because you may or may not be in a flood zone, it doesn't mean that you might not have the potential to have flood damage. Now, this is the best part about flood insurance. And I actually love this question because I love the answer that I can give. If you're in an area that is low risk for flood damage, the price you're going to pay for a flood insurance policy is going to reflect that. Let me say it again. If you're in an area that is low risk for flood, then the premium you're going to pay for a flood insurance policy is going to reflect that, meaning that yes, you might not feel like you're in a flood zone, or you might not feel that you have a lot of exposure to flood. And guess what? If that's the case, then the premium for the insurance policy you're going to purchase is going to show that as well, meaning it's going to be very inexpensive. So my answer is, if you are even thinking about flood insurance, if you're even concerned about any type of weather events like this, then go ahead, get a proposal for flood insurance and see what it looks like. Now, what's interesting again with flood insurance, you can get a policy through the National Flood Insurance Program, right? That's the feds. Or you can go through a private insurance company. There are many private insurance companies that offer flood insurance, and that is not a well-known fact. They think, well, flood insurance is through the feds, and that's just the way it is. Well, you can get it there. You can get it through FEMA. By the way, you get those policies through independent agents and brokers. You don't have to necessarily go to FEMA or go through that bureaucracy. You can just call your neighborhood agent. But if in the event that you want to get something other than that, then you can check with an independent agent or broker again and find out what other companies are offering flood insurance in your area. Not only are the prices drastically different, but the coverage types are more customizable and they are different as well. So, great question on flood insurance. And again, just remember, unlike a lot of other types of insurance, the risk exposure will be extremely coordinating with the premium you are paying, which is a good thing. All right. Next, Joe. Okay. I am in the process of updating my auto insurance, and I'm a bit confused about the difference between comprehensive and collision. Do I need both? Is one essential? Explain, blah, blah, blah. Okay. Comp and collision. It's funny because years and years ago, they wanted to change the term comprehensive coverage to not collision or other than collision, because you had collision and comp, and they thought, well, comprehensive, well, the word means it's pretty much everything, right? It's comprehensive. And that caused some confusion. It still does. Unfortunately, that never really picked up any momentum, so we still do refer to it as comp or comprehensive and collision. So let me tell you about the difference between the two. Collision is going to give you coverage for your vehicle minus a deductible for when the vehicle is damaged in motion. Okay? Think about a car accident. Think about running into a lamppost. It happens. Think about the vehicle being damaged while you're using the vehicle. Now, if the vehicle is damaged while it is not in motion, think theft. Think a rock falling on the car or, when it's parked. Think about somebody kicking it. Those types of things. That would be falling under comprehensive coverage. You can see why the term comprehensive kind of doesn't explain what that actually is. It's not comprehensive. It's very specific, actually. It's fire, theft, and damage to the vehicle when the vehicle's not moving. Now, there are some exceptions in certain states. They will consider hitting certain types of wildlife a comprehensive claim, even though you are actually moving. It's a whole other issue. But in general, if you want to know the difference, collision coverage is going to be while the vehicle's moving, comprehensive when the vehicle is not moving. As far as what is important or what is more important or not as important, sometimes people will decide that the vehicle's value has gone down significantly enough where it doesn't make sense for them to carry coverage for physical damage on their car, meaning that the premium that they're paying in a couple of years would be about the value of the vehicle anyway. So they'll elect to not carry physical damage coverage, which means they're not going to carry comprehensive or collision. And sometimes people will say, you know what? I just want fire and theft. If the car is stolen, if something like that happens, I want to have coverage. Otherwise, if I'm in an accident, I'm in an accident. I'm either not going to fix the car or I'll hope that it's not my fault and someone else will pay to fix it. So they will just carry comprehensive coverage. Also, back in the day, there was actually the ability to purchase literally just a theft policy for your vehicle. Who knew? Not available, at least not that I'm aware of anymore, but the closest we get to that, again, would be comprehensive coverage. All right? Let us get on to the next question. My teenage daughter got her driver's license, and I'm trying to figure out the best way to add her to my auto insurance policy. How significantly will this impact my premium? Are there discounts available for good grades or completing driver's education? Great question. Blah, blah, blah. Okay. First of all, I just want to be clear. You're asking what is the best way to add her to your auto policy. The best way is to add her. Don't do any shenanigans. You want to be sure that your drivers are listed on the policy. You never want to give an insurance company a great reason to not pay a claim, and not listing your child with a driver's license, it's a pretty good way to have problems in the event of a claim. Now, a lot of insurance companies are going to offer discounts for things like having good grades. Different carriers have different guidelines. Some of them want a 3.0, some want a 3.5. It's all over the place. But definitely find out what type of discounts are available for your newly licensed daughter driver. And again, just ask your agent or broker, say, hey, by the way, what discounts are there for a new driver for my daughter? They will be able to tell you, because again, that does change depending on what insurance company you're with. Do expect to see the premium increase. Remember, driver's insurance, and auto insurance in general, has a large factor having to do with the experience of the drivers on the policy. Someone that just got their driver's license obviously does not have a lot of experience. Statistically, they do tend to have more accidents than people that have more experience driving. It's unfortunate, but it's a statistical and an absolute reality. So yes, it's going to cost you something. With that wonderful news, let's take a quick break. When we come back, more of your questions. I'm Karl Susman, and you are learning from Insurance Hour.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me today. Phone lines are open. Give us a buzz, 559-656-0317. That is 559-656-0317. You can call or text that number. Also, send your questions in to questions@insurancehour.com. If you want to post a question, get a private answer, just jump on the website at insurancehour.com/ask. Private question and answer. We will do what we can to give you a hand. We are going through your questions submitted today, so let me continue on without further ado. I am considering purchasing life insurance to secure my family's financial future, but overwhelmed at the options, term life, whole life. Yes. Could you explain the difference between these types and how to determine what might be the best fit for someone in their mid-30s with 2 young children? Okay. Now, when we're talking about life insurance options, we could do entire shows on this. Actually, there are entire shows that are dedicated to nothing other than life insurance. So let me try and condense down some rough advice, in a minute or so. That is, again, not going to take the place of doing some real investigation for you. So first of all, life insurance comes in 2 flavors for the most part: temporary and permanent. So when you're thinking about it and you're saying term insurance, that's going to be temporary, and whole life, for example, is going to be permanent. Other types of permanent types of life insurance are universal life, variable universal life, things of that nature. So the first thing you need to decide is, ideally, what type of insurance are you looking for? Do you want life insurance for a specific period of time, maybe while your kids are young, and once they reach a certain age, they're on their own, kick them out of the nest, let them fly? Or do you want to purchase a policy that's going to, in essence, be around as long as you are, at least, or longer? that's one of the deciding factors you want to have. The other is, are you looking to have the life insurance provide any type of living benefit? I know that sounds weird because we know, what does life insurance do? It pays when you die. Well, there are also some living benefits that you can get for life insurance, and one of those has to do with cash accumulation. A lot of types of permanent life insurance policies will offer cash accumulation, meaning that part of the premium that you're paying is going to pay for the actual life insurance. The other part is being invested in some form for you. Now, I'm not a financial advisor, so I'm not going to get into the specifics about whether that's a good investment or a bad investment, whether the returns are good or bad. Just understand that in general, permanent life insurance policies tend to have some form of a cash value or an investment feature to them. So those are the first things you want to consider. Now, understand as well that the cost value between permanent insurance and temporary insurance is significantly different. And this is highly contested as well, right? What is cheaper? Something that you pay, let's just say $1,000 a year for 30 years, or something that you pay $2,000 a year for 30 years, but in 30 years, the policy keeps going. And maybe in 40 years, you can get $10,000 of that money back. Maybe it goes for another 20 years. You can see how what is less expensive can become a little bit difficult because you're talking about potentially having more money in cash than in premiums you've paid, and or you're talking about having even a return of premium. There are some types of life insurance policies, they're called ROP, return of premium policies, where you'll pay X dollars for 30 years. At the end of 30 years, if you're still alive, you get the money back. No interest, no cash, nothing fancy. It's just a return of your premium. Now, is that going to cost more money than a straight temporary policy that's just paying for 30 years and then you're walking away? Of course. So a lot of options here. I would say cost factor is going to be a big part of your consideration. So sit down with your life insurance professional, tell them what it is your goals are, hopefully in the order of importance, right? Number one is I want to be sure I have this much coverage, or is number one you want to be sure that it lasts for a long enough time, or is number one that you want to be sure that you get some money back while you're alive? Figure those things out and have an idea when you're going to sit down with your life insurance expert, because it's important to have some ideas to be able to provide to them so they can advise you. Great question. Again, life insurance is a complex one, and sometimes people look at it more as a commodity, and it's so simple, just get this, and you hear ads on the TV about, oh, it's so simple, get quotes from 20 companies, blah, 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 but there is a lot more under the surface. And these are your dollars that you're spending. So you want to be sure that you get all the information up front that you can. All right, next. I run a small graphic design business out of my home, and I'm wondering how this affects my homeowner's insurance premium. Does my current policy cover my business equipment and liability, or do I need additional coverage? Okay, it's a great question. Certainly after the pandemic, we are seeing a lot more people working from home. Well, the insurance industry had to adjust to that. So a lot of the provisions within, we're going to just say homeowners insurance policies, but I'm saying that generically. We could be talking about a condominium owner's policy or maybe even a renter's insurance policy on occasion. But policies typically are there and they're designed to pay for losses that are based on individuals, not businesses. So the overarching concept is your business is not going to be covered under your homeowner's insurance policy. Now, having said that, there are some exceptions. There are some provisions that some homeowners insurance policies will offer where you can add coverage in for your business personal property. Some types of business, depending on if you have any foot traffic, meaning are customers coming to your home or not, will even extend liability coverage from your homeowners to your business. It's a little harder to find that these days, but some of them will, depending on the nature of your business. Keep in mind, it makes a little bit of sense when you think about it, because what is the way, how do you possibly price a product for me? I'm just a homeowner versus you're a homeowner that has people come into your house to review graphic designs that you're putting together. And you might be selling those graphic designs, hopefully, to them. And you're going to be making money from that. Maybe they don't like the design. There's some type of copyright infringement and they get sued, so they want to sue you. You can see how the exposure between my homeowner's policy and yours would be drastically different. So typically, you should be under the impression that without some significant changes to your homeowner's policy or obtaining a separate policy, your homeowner's insurance is not going to cover your business stuff or your liability exposure. Now, there are policies that are called home-based business policies. They're fairly inexpensive. And again, depending on the type of the type of business you're in, you'll be able to get an idea of what those costs are. And when I say inexpensive, I'm saying you could be looking at $500 to $1,000 a year to be able to have one of these small home-based business policies. I think that's pretty affordable, considering the alternative used to be having to get a policy and move into an office and pay for all of those expenses and pay for the liability for that and pay for the property and pay for all those other things. So if you're running a small business out of your home, don't look to your homeowner's insurance policy. Look to some type of home-based business policy as a starting point, and then check with an agent or broker to see if that's going to be sufficient for you or if you need to get something more comprehensive than that. We're going to take our next break, and we will be back with your questions. You are here with me, Karl Susman, and you are learning from Insurance Hour. We will be back in 60 seconds. Don't go away.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at sussmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me. Can you believe it? We are halfway through the show. We better jump right into it. Remember, if you have questions, give us a call or text at 559-656-0317. You can also email your questions in to questions@insurancehour.com or jump on our website, insurancehour.com/ask. Go ahead and put your question there. We will get you a private answer back, and we will do the best we can. On that note, I want to make a quick, disclaimer that I'm a licensed broker, been doing this for 30 years, but I don't always get it right. I'm only human. So if you hear something that doesn't sound correct to you, that sounds like, that's not what I was told, or I've seen something to the contrary, let me know. Tell me what it is that you're finding that is in conflict with what I'm saying, because if I'm wrong, I want to correct it. I want to be sure everyone is getting the most accurate and up-to-date information that they can. No ego for me on this. I want to know and I want to get the right information to you. So again, always doing my best to give you the most accurate and up-to-date information, but I can get it wrong. And if you feel that I have, please take the time to let me know so I can learn, and therefore I can let everyone else learn that's paying attention as well. All right, let's jump right back in. This email from Jill. I recently inherited a valuable jewelry collection from my grandmother. I'm concerned that my homeowner's policy might not cover it. Okay. First of all, I'm sorry for the loss of your grandmother. It is difficult for sure. Usually grandparents are, I say usually, those are typically the people that we lose first. And that's our first experience with death. I remember the first person that I really knew that passed away was my grandfather. And I remember it well. So I'm sorry for your loss. It sounds like she left you some jewelry, and it's not going to make up for the loss, but it's nice to have. You definitely want to be sure that you have the right protection for it. First and foremost, understand that there is no amount of money that's going to be able to compensate you for the jewelry in the event that it's stolen. You can't say, well, this jewelry, even though this particular necklace might only be worth $500, it's worth $1 million to me, and insure it for that. It doesn't work that way, unfortunately. So first things first, be aware that when you're looking to get coverage for your jewelry, it's going to be based on the actual value, the market value of the jewelry, not what it means to you. And that's a big one. I run into that from time to time with clients. where there's sentimental value, and you can't really insure sentimental value. You can only insure the tangible item and what the value of it is at that time. So to answer your first question, you're absolutely right. Your homeowner's insurance policy is going to give you bupkis. Yes, that's an official insurance term. It's going to give you very little with regard to coverage on your homeowner's policy. You might be looking at a $1,000 limit for jewelry on your policy. Some policies might have slightly more coverage on there. It depends. Some you might be able to bump up a little bit to $2,000, $3,000, maybe even $5,000. But again, not a lot. And from the sounds of your email, you're saying a jewelry collection. So I think we're talking about significantly more. What you're going to want to do then is get what's called a personal article floater, a PAF. We love these little abbreviations in the insurance world, don't we? You're going to get a PAF for your jewelry, and that's going to be a specific policy that's going to cover your jewelry. It's going to cover your jewelry outside of your homeowner's policy, outside of any other policy you have. It will be a policy just for those items. When you're getting a jewelry policy like this, be prepared to provide appraisals, because the insurance carrier is going to need to have, number one, some type of verification that this jewelry exists. And number two, they're going to need a third party that's going to give them a value for it. Remember, what it's worth to you is not something you can insure it for. You can only insure it for what its value is. And again, that can be subjective. And the insurance carriers know that. So if you go to, let's say you buy jewelry. This is not your situation, but I think this happens with some frequency. You go to a jeweler and they say, I'm going to sell this to you for $10,000, but I'll give you an appraisal for $20,000 because I'm giving you such a great deal. Yeah, that doesn't typically work, because if the value of it is really $10,000, the appraisal showing $20,000 is not going to do anything for you, okay? This is not, you're not supposed to be made better off with a loss. You're supposed to be made whole, right? So if it's $10,000 piece of jewelry and you're insuring it for $20,000, don't expect to get $20,000, look to get close to $10,000. In your situation, again, you didn't buy any of these things, so you're going to need to find someone to appraise the items for you. And I would say I would go online, do some checking, maybe even ask your local agent or broker, maybe even a real estate agent if you're familiar with one in your neighborhood, if they're aware of any jewelry appraising companies. It's a niche. It's a very specific industry, and you want to have someone that's going to do a good job with this. Typically, they will come out to your house and look at it for a fee. Otherwise, depending on how much you have, you can also take it into them. Now, remember, when you're going to do this, I hate to have to say this, but I've been around this once, so I have to. If you find someone that's going to appraise your jewelry and they don't have a storefront, it's maybe they're working from their house, they claim they're retired doing it or this, that. Be careful before you just drop off your jewelry at a stranger's house. I mean, I hate to say it, but I've seen it happen. So be sure you're working with a reputable company, a reputable person. Find out if they have an insurance policy. There is coverage that a jewelry appraising company or individual can have that would protect things. It's called your jewelry is under their care, custody, and control. So you'd want to be sure that maybe if they have a loss while your things are there, you would have coverage for your jewelry, right? I know it's not what you're thinking about at this point, but when you're getting your stuff appraised, be sure that you're putting it somewhere that you can be sure that it's going to be legit, number one, and two, potentially protected in the event there's a loss. And just in case you're curious, I had a customer that had taken their jewelry to someone they had found online that said they were a retired jeweler. They took them to their house. They left a lot of expensive jewelry there to get appraised. And within a day or two, they got a phone call from the person claiming they had been broken into and all of their things were stolen and they're really sorry. Have a nice day. I'm not saying that that's not what happened. It might very well have happened. I have a hard time buying the coincidence of it, but I can't help it, I suppose. Maybe I'm a little cynical being in this business for as long as I have. But case in point, just be aware before you drop something of value off to a stranger, do a little bit of due diligence, okay? Speaking of due diligence, I want to be sure you know that if you do have questions about things and you're not sure, that you can contact me privately at insurancehour.com/ask. That is not a public forum. That is not a place where I'm going to post your question and post the answer. That's just a secure portal where you can put your information in and ask a specific question, and I will get you back the best I can with a specific answer. If you're okay having your question broadcast to the world like I'm doing right now, go ahead and send them in the usual channels, either by email at questions@insurancehour.com or giving us a call or text at 559-656-0317. And with that, can you believe we are over halfway through with the program? Let's take another quick break. When we come back, we will get back to your emailed questions. I am Karl Susman, and you are learning from Insurance Hour.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Greg.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me here today. We are learning about all sorts of insurance-related items. If you have some questions you want to ask, feel free to give us a call or text at 559-656-0317. Or you can do like a lot of people have and send your questions in by email to questions@insurancehour.com. Or if you want to get a private answer also, you can just jump on to insurancehour.com/ask, and you can post your question there and get a private answer. Not a public forum, just a private portal for you to be able to ask your individual